Look, I need you to pay very close attention to what I'm about to share with you because what's happening in the silver market right now is something most people won't see coming until it's too late. And by then, the opportunity will have passed them by completely. Right now, as I'm recording this, silver is trading in a range that's creating what I can only describe as a perfect storm. And I'm not using that term lightly. I've been watching precious metals markets for years, and what I'm seeing right now is the kind of setup that only comes around once in a generation. Let me paint you a picture of what's actually happening behind the scenes, because the mainstream financial media isn't telling you this story. They're too busy talking about the latest tech stock or whatever distraction is trending this week. But while everyone's looking the other way, something massive is building in the silver market. First, let's talk about what silver actually is in the global economy. Most people think of it as just another precious metal, maybe gold's little brother. But that's a fundamental misunderstanding of what makes silver unique. Silver is the only metal on Earth that's both a monetary asset and an industrial commodity. Think about that for a second. It's money, but it's also absolutely critical to modern technology. Your smartphone has silver in it. Your computer has silver in it. Solar panels, which governments around the world are mandating at unprecedented rates, are absolutely dependent on silver. Electric vehicles use significantly more silver than traditional cars. 5G infrastructure requires silver. Medical equipment relies on silver's antibacterial properties. The list goes on and on. Here's where it gets interesting. Unlike gold, which mostly just sits in vaults after it's mined, silver gets consumed. It gets used up in industrial applications, and much of it is never recovered. It's gone forever. We're literally using up the world's silver supply, and we're doing it faster than we're pulling it out of the ground. Now, let me tell you about something that happened back in the late 70s that most people have forgotten about. In 1979 and 1980, silver went from around $5 an ounce to $50 an ounce in a matter of months. $50, that's a 10 times increase in less than a year. And you know what's fascinating? The industrial demand for silver back then was a fraction of what it is today. A fraction. Back then, silver was primarily a monetary metal and used in photography. That was basically it. Today, silver is in everything. The industrial demand is exponentially higher, and yet the price is nowhere near those inflation-adjusted highs. When you adjust that 1980 peak for inflation, we're talking about silver being worth well over $100 in today's money. And yet here we are, with silver trading at a fraction of that. But here's what really keeps me up at night, and what should have your attention. The supply situation for silver is getting tighter by the day. Let me break down what's actually happening in the mining industry, because this is where the story gets really interesting. Silver mining is not like other industries. You can't just decide to produce more silver when the price goes up. It doesn't work that way. Most silver, about 70% of it, comes as a byproduct of mining other metals like copper, lead, and zinc. That means silver production is largely dependent on the economics of those other metals, not silver itself. And here's the kicker. Many of the world's largest silver mines are depleting. The ore grades are declining, meaning miners have to process more rock to get the same amount of silver. Production costs are rising. And new discoveries? They're not keeping pace with depletion. Not even close. I was looking at data from primary silver mining companies, and what I found was startling. Several major producers have reported declining output over the past few years. And it's not because they don't want to produce more. They physically can't. The silver isn't there in the quantities it used to be. Meanwhile, on the demand side, we're seeing something unprecedented. Industrial demand for silver hit record levels recently, driven primarily by the solar panel industry. And this isn't a temporary spike. Governments around the world have committed to massive green energy transitions. The European Union, the United States, China, India, they're all mandating increased solar capacity, and every single one of those solar panels requires silver. Let me give you some specific numbers to put this in perspective. A typical solar panel uses about 20 grams of silver. That might not sound like much until you realize that the solar industry is projected to install hundreds of gigawatts of new capacity over the next few years. We're talking about hundreds of millions of ounces of silver demand just from solar panels alone. And that's just one industry. Electric vehicles are another massive demand driver. A traditional internal combustion engine car uses about 15 to 28 grams of silver. An electric vehicle uses between 25 to 50 grams. Some estimates put it even higher for certain models. As the world transitions to electric vehicles, and every major automaker has committed to this transition, silver demand is going to surge. Now, here's where the story takes a turn that most people aren't aware of. Let's talk about what's happening in the paper silver market versus the physical silver market. This is crucial to understanding why we might be on the verge of something big. The COMEX, which is the major exchange where silver futures are traded, has a fascinating relationship with physical silver. On paper, massive amounts of silver are traded every single day. We're talking about hundreds of millions of ounces changing hands in the futures market. But here's the thing. Most of that silver doesn't actually exist in physical form. It's paper contracts. Now that's normal for commodity markets. Futures markets exist to allow producers and consumers to hedge their risk. But what's not normal is the ratio between paper silver and physical silver. Some estimates suggest that for every ounce of physical silver that actually exists in COMEX warehouses, there are hundreds of ounces of paper claims on that silver. Think about that like a bank. Imagine if your bank only kept $1 in the vault for every $100 that depositors thought they had in their accounts. As long as everyone doesn't try to withdraw their money at the same time, the system works. But what happens if there's a run on the bank? That's the situation we potentially have in silver, and there are signs that physical demand is starting to overwhelm the paper market's ability to deliver. I've been watching the COMEX warehouse stocks, and they've been declining. Not dramatically, but steadily. And when you combine that with record demand from both industrial users and investors, you start to see the potential for a serious supply squeeze. Let me tell you about something that happened not too long ago that gives us a preview of what could happen. There was a period where physical silver premiums, the amount you pay above the spot price to actually get physical metal in your hands, spiked dramatically. We're talking about premiums of $5, $6, even $7 over spot for basic silver products. Dealers were running out of inventory. Mints couldn't keep up with demand. Wait times stretched to weeks or even months. And you know what the spot price did during much of that time? It barely moved. Because the spot price is determined by the paper market, not the physical market. But eventually, if the physical shortage persists, the paper price has to catch up to reality. It has to. Because at some point, industrial users who actually need physical silver for manufacturing can't get it at the paper price. They have to pay up. And when they start paying up, the whole price structure shifts. Now let's talk about something that doesn't get nearly enough attention. Central banks and governments. For years, the focus has been on gold. Central banks around the world have been accumulating gold at record rates. Russia, China, India, Turkey, Poland, the list goes on. They've been buying thousands of tons of gold, moving away from dollar reserves. But here's what's interesting. Some countries are also starting to accumulate silver. It's not as publicized, and the amounts are smaller, but it's happening. And it makes sense when you think about it. If you're a country trying to diversify away from the dollar and you believe precious metals have monetary value, why wouldn't you also accumulate silver? Especially when silver is so much cheaper relative to gold than it has been historically. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has been wildly out of whack. Historically, that ratio has averaged somewhere around 15 to 1 to 30 to 1. There have been periods where it's been as low as 10 to 1. But in recent years, we've seen that ratio spike to 80 to 1, even 90 to 1 at times. Right now, even after some correction, the ratio is still elevated compared to historical norms. What that tells you is that silver is undervalued relative to gold. And when you consider that silver has all this industrial demand that gold doesn't have, the undervaluation becomes even more apparent. Here's another angle that's absolutely critical. Let's talk about inflation and currency debasement. I know you've felt it. Everyone has. The cost of everything has gone up. Groceries, gas, housing, healthcare, education. Your dollars don't go as far as they used to. And that's not an accident. That's the result of decades of monetary expansion, and it's accelerated dramatically in recent years. When governments and central banks create trillions of dollars out of thin air, that money has to go somewhere. It flows into assets, stocks, real estate, commodities. And precious metals, historically, have been one of the primary beneficiaries of currency debasement. Because unlike paper money, you can't print silver. You can't create it out of nothing. It has to be pulled out of the ground, refined, and brought to market. There's a real cost and a real limit to supply. Now, I want to take a quick moment here because this is important. If you're someone who's been thinking about protecting your wealth, especially if you have significant retirement savings, there's something you should know about. I've put together a comprehensive guide on how gold IRAs work. It's completely free, and you'll find it in the description below. This guide walks you through exactly how you can move funds from existing retirement accounts into physical precious metals without triggering taxes or penalties. If you have $100,000 or more in retirement savings, this is definitely worth looking at. It covers everything from the rollover process to storage requirements to the tax advantages. Just check the description, grab the guide, and you'll have all the information you need. All right, back to what's happening in the silver market, because there's more to this story that you need to understand. Let's talk about what's happening with investment demand, because this is where things get really interesting. For years, silver investment demand was relatively modest. Sure, there were always people buying silver coins and bars, but it wasn't a massive market. Then something changed. The rise of silver ETFs, exchange-traded funds that hold physical silver, created a new avenue for investment demand. Suddenly, investors who didn't want to deal with storing physical metal could get exposure to silver through their brokerage accounts, and money poured in. Billions of dollars flowed into silver ETFs. But here's what's fascinating. During periods of high demand, these ETFs have to go into the market and buy physical silver to back the shares they're issuing. That physical silver comes out of the available supply. It gets locked up in vaults. And unlike industrial silver that gets consumed and is gone forever, this silver just sits there. It's not available for industrial use. It's not available for minting coins. It's just sitting in ETF vaults. So you have industrial demand consuming silver permanently. You have investment demand locking up silver in ETFs and private storage. And you have mining production that's not keeping pace. What do you think happens to price when you have that equation? Now, let me tell you about something that happened in the silver market that most people have forgotten about, but it's incredibly relevant to what we're seeing today. Back in 2011, silver had an incredible run. It went from around $17 at the beginning of the year to nearly $50 by April. That's almost a 3 times increase in just 4 months. What drove that move? It was a combination of factors. You had concerns about the financial system after the 2008 crisis. You had massive quantitative easing from central banks. You had investment demand surging. And you had a growing awareness of the supply and demand fundamentals in silver. But then something interesting happened. The price got crushed. Within a matter of weeks, silver fell from $50 back down to the low 30s. And over the following years, it continued to decline, eventually bottoming out around $14. A lot of people who bought silver near the top in 2011 got burned. They watched their investment lose half its value or more. And that created a whole generation of investors who became skeptical of silver. They'd heard the hype, they'd bought in, and they'd lost money, so they swore off silver. But here's what's different now compared to 2011. Back then, the move in silver was driven primarily by investment speculation and monetary concerns. The industrial demand story was there, but it wasn't as compelling as it is today. Solar panels weren't the massive industry they are now. Electric vehicles were barely a thing. 5G didn't exist. Today, the industrial demand case for silver is stronger than it's ever been. And it's not speculative. It's real, tangible demand from industries that are growing and have government mandates behind them. That's a completely different foundation than what we had in 2011. Plus, the supply situation is tighter now. We've had years of underinvestment in mining. We've had depletion of existing mines. We've had rising production costs. The supply side of the equation is more constrained than it was back then. So when I look at the current setup in silver, I see something that has the potential to be much more significant than what we saw in 2011. Because this time, it's not just about monetary concerns or investment speculation. It's about fundamental supply and demand in a market where supply is constrained and demand is accelerating. Let me give you another historical parallel that I think is really relevant. Go back to the 1970s. At the beginning of that decade, gold was $35 an ounce. It was still technically fixed to the dollar, though that system was breaking down. By the end of the decade, gold had hit over $800. That's more than a 20 times increase. What drove that move? It was a combination of inflation, currency debasement, loss of confidence in the dollar, and geopolitical instability. Sound familiar? Because we have all of those factors today, arguably to an even greater degree than we had in the 70s. The difference is, back in the 70s, the world wasn't as interconnected as it is today. Global trade was a fraction of what it is now. The financial system was less complex. The amount of debt in the system was much lower. Today, we have a global financial system that's built on unprecedented levels of debt, with central banks that have shown they're willing to print unlimited amounts of money to keep the system functioning. And in that environment, hard assets, things that can't be printed or created out of thin air, become incredibly valuable. Gold and silver are the ultimate hard assets. They've been money for thousands of years. They've survived every currency collapse, every financial crisis, every empire that's risen and fallen. Now let's talk about what's happening in China, because this is a part of the story that doesn't get enough attention. China is the world's largest producer of silver. They mine more silver than any other country. But here's the thing. China is also a massive consumer of silver. Their industrial demand, particularly for solar panels and electronics, is enormous. And increasingly, China is keeping more of its silver production for domestic use rather than exporting it. They're recognizing the strategic importance of silver for their industrial and technological ambitions. And when the world's largest producer starts consuming more of its own production, that tightens global supply for everyone else. There's also the geopolitical dimension to consider. We're living in a world where the United States and China are in an increasingly adversarial relationship. Trade tensions, technology restrictions, military posturing in the South China Sea and around Taiwan. This isn't just background noise. It has real implications for commodity markets. If tensions escalate further, if we see more restrictions on trade, if supply chains get disrupted, where does that leave countries that are dependent on imported silver for their industrial needs? It creates vulnerability, and smart governments and corporations are thinking about this. They're thinking about securing supply, and that means buying silver now, before it becomes a critical shortage. Let me tell you about something else that's happening that most people aren't aware of. There's been a significant increase in silver buying from wealthy individuals and family offices. These are people and institutions with serious money, and they're allocating portions of their portfolios to physical silver. Why? Because they understand what's coming. They see the same supply and demand fundamentals I'm talking about. They see the monetary risks. They see the geopolitical tensions. And they're positioning themselves accordingly. They're not waiting for silver to hit $50 or $100. They're buying now, while it's still relatively cheap. And here's the thing about wealthy buyers. They don't buy small amounts. When a family office decides to allocate to silver, they might buy hundreds of thousands of ounces or even millions of ounces. That's real demand that comes out of the available supply. And it's happening quietly, behind the scenes, while most people aren't paying attention. Now, I want to address something that skeptics often bring up. They say, if silver is so great, why hasn't the price already gone up? Why has it been stuck in this range for so long? It's a fair question, and the answer is actually pretty straightforward. The silver market is relatively small compared to other financial markets. The entire above-ground supply of silver, all the silver that's ever been mined and still exists, is worth maybe $1 trillion at current prices. That's tiny compared to the stock market, the bond market, or the real estate market. It's even small compared to the gold market. Because the market is small, it doesn't take a lot of selling pressure to keep the price suppressed. And there have been entities, particularly large banks, that have had an interest in keeping precious metals prices low. There have been investigations, fines, and admissions of manipulation in the gold and silver markets. This isn't conspiracy theory. It's documented fact. But here's the thing about manipulation. It can only work for so long. Eventually, physical reality asserts itself. If industrial users can't get the silver they need at the paper price, they'll pay whatever they have to pay. If investment demand overwhelms available supply, the price has to rise. You can manipulate a market in the short term, but you can't repeal the laws of supply and demand indefinitely. And I think we're approaching that inflection point. The signs are there, if you know where to look. Tightening physical supply, rising premiums, increasing industrial demand, growing investment interest, geopolitical tensions, currency concerns. All of these factors are converging. Let me paint you a picture of what could happen if we do see a major move in silver. Imagine silver goes from $30 to $60. That's a doubling. For someone who owns 1,000 ounces, that's a $30,000 gain. For someone who owns 10,000 ounces, that's $300,000. And if silver goes to $100, which is not unrealistic given the fundamentals and historical precedent, those gains multiply even further. But here's what's really important. It's not just about making money. It's about preserving wealth. If we're entering a period of significant inflation or currency debasement, Holding dollars means watching your purchasing power erode. Holding silver means you have an asset that maintains its value or even increases in value as paper currencies decline. Think about it this way. If you have $100,000 in cash and inflation runs at 10% for a few years, your purchasing power has been cut dramatically. But if you have that $100,000 in silver, and silver appreciates, as it typically does during inflationary periods, you've not only preserved your wealth, you've grown it. This is why throughout history, during times of monetary instability, people have fled to precious metals. It's not because gold and silver are perfect investments, it's because they're the best way to preserve wealth when paper currencies are being debased. They're insurance against the worst-case scenarios. And let's be honest about where we are economically. We have debt levels that are unprecedented in human history. The United States alone has over $30 trillion in national debt, and that number is growing by trillions every year. There's no realistic plan to pay that debt down. The only way out is to inflate it away, which means printing more money, which means currency debasement. Other countries are in similar or worse situations. Japan's debt to GDP ratio is over 200%. Many European countries are heavily indebted. China has massive debt in its corporate and local government sectors. This is a global problem, not just a U.S. problem. And when you have that much debt in the system, there are only a few possible outcomes. You can have defaults, which would be catastrophic for the financial system. You can have austerity, which is politically unpopular and economically painful. Or you can have inflation, which is the path of least resistance for politicians and central bankers. I think we all know which path they're going to choose. They're going to print. They're going to inflate. They're going to try to grow their way out of the debt problem by debasing the currency. And in that environment, hard assets like silver become incredibly valuable. Now, here's something else to consider. We're potentially on the verge of a major shift in the global monetary system. For decades, the US dollar has been the world's reserve currency. That's given the United States enormous advantages. We can print dollars and the rest of the world has to accept them because they need dollars for international trade, particularly for oil. But that system is being challenged. The BRICS nations, Brazil, Russia, India, China, and South Africa, have been talking about creating alternative payment systems that bypass the dollar. China and Russia have been settling trade in their own currencies. Saudi Arabia has been discussing accepting yuan for oil sales. These are significant developments. If the dollar loses its reserve currency status, or even if that status is diminished, the implications are enormous. It would mean less demand for dollars globally, which would mean the value of the dollar declining, which would mean inflation in the United States accelerating. And in that scenario, precious metals would likely soar. I'm not saying this is going to happen tomorrow. These are long-term trends that play out over years or even decades. But the direction is clear. The world is slowly moving away from dollar dominance, and smart investors are positioning themselves for that shift. So where does that leave us with silver? I think we're at a critical juncture. The fundamentals have never been better. Supply is tight and getting tighter. Demand is strong and accelerating. The monetary backdrop is favorable. The geopolitical situation is creating additional demand for hard assets. And the price is still relatively low compared to historical peaks and compared to the fundamentals. This is the kind of setup that doesn't come around often. And the clock is ticking because once this move starts, it's going to happen fast. Silver is a small market. When money starts flowing in, the price can move dramatically in a short period of time. We saw it in 1980. We saw it in 2011. And I believe we're going to see it again. The question is, are you going to be positioned before it happens? Or are you going to be one of the people watching from the sidelines, wishing you'd acted when you had the chance? Because that's what happens in these situations. Most people wait until the move is already underway, until silver is making headlines, until everyone is talking about it. And by then, a lot of the gains have already been made. The smart money acts before the crowd. They see the setup, they understand the fundamentals, and they position themselves early. That's how wealth is built. Not by chasing what's already gone up, but by identifying opportunities before they're obvious to everyone else. Silver is that opportunity right now. The pieces are all in place. The story is compelling. The risk-reward is favorable. And time is running out to position yourself before this market makes its next major move. Don't let this opportunity pass you by.